Good morning, everyone, and welcome back to my channel. This is your daily source for essential financial news and updates, and I am your host Pavan, welcoming you all. We are here to provide you with a comprehensive review of the latest happenings in the financial world, helping you stay ahead with this ever-changing landscape. So let's dive into the headlines shaping today's market. So in the first news, the World Bank says global economy is getting weaker, but US and India are bright spots. So the Chief Economist Officer of World Bank, Mr. Indermeet Gill, has commented that the global economy is getting weaker. So why it is getting weaker? It is the global growth is dragged by higher interest rates and many conflicts going on. You are following up with Russia-Ukraine war for they're almost 1.5 years now. Also, new problems are being created in Middle East, Israel-Palestine conflict, and of course in Africa also. So there are so many issues in global economy, which is hampering the global trade and growth. But India and US, they are standing out. They are giving very good results. The US unemployment data, India's GDP data, they're all very encouraging. And this is very also remarkable because now the interest rates are very high. And the interest rates, they drag economy of a country. Inflation is also very high in these countries. Then also they are showing remarkable growth. So it is very encouraging. You can imagine if the interest rates would have been lower, what would have been the growth rate for this economy. Mr. Gill has also commented that not only these countries, we have also not seen any big economy really getting into trouble. So despite of all these challenges, all the big economies are holding out. They are not. They have stopped going into recession. There were some chances of UK and Germany going to recession, but they have pulled back, and they are doing well. They are not showing good results, but they are holding up. So that is a very good positive also. And now moving on to IMF. Now IMF has advised India that it should work on its debt problem. It has commented that India has a high debt problem like that of China, but the risks associated with it are not as great as China. So you know that we have been discussing about the high level of debt in China. The current debt in India is also very high. It stands at 81.9% of the GDP, compared to China, which is 83%. So while looking at figures, you will think that India and China, the debt is almost equal. But I personally do not agree, as the figures from China are not reliable. Also, they have a huge debt on the books of local government, the companies which are mostly owned by government. So if we calculate all that debt, all those debt, it will be much higher from India. But nonetheless, we should take this advice positively. We should not complain. And so what IMF is saying, that because of high debt, the interest payments on debt is also high. So India is paying 5.4% of the GDP on just interest repayments. So this we need to bring down. IMF has also commented that debt for India is projected to fall slightly by 1.5% to 80.4% in 2028. But this is not this is not enough. India need to do a lot to bring the debt in control, and should have a medium-term plan in place. Now, the third news: India allows SBI mutual fund to acquire 9.9% of paid-up equity share in. But why 9.99% and not 10% or more? So RBI understand the importance of banking system, and to prevent any single person or entity from manipulating the system or having absolute say, it has put ownership cap. So it has put ownership cap to protect banks The reason why it has put this ownership cap is, first, it helps to prevent any single shareholder from gaining too much control over a bank. This is important to protect the interests of depositors and minority shareholders. Second, the ownership cap helps to promote competition in the banking sector. So if a few large stakeholders are allowed to own large stake in multiple banks, it could lead to a concentration of power and reduction in competition. So RBI has put this ownership cap, and anyone who wants to own higher ownership in a bank, it has to seek permission from RBI before buying. So earlier, SBI Mutual Fund has acquired a stake of 9.99%, HDFC Bank also. So now we can call SBI Mutual Fund a 9.99% stake mutual fund also. Now, next year, you all might have heard about Bharti AXA Life Insurance. So it was a joint venture between Bharti Enterprises and AXA, which is a global leader in insurance and asset management. They formed this company way back in October 27, 2005 and started operation in 2006. Now, AXA is planning to exit this joint venture. The 49% of the French insurance AXA will be acquired by Bharti, and it will be taking full control of the venture. It is not clear why AXA has exited, but it can be an unfolding story, and we may come to know later on why this development has happened. Another news: TCS has announced buyback and also its September quarter results. We had informed our viewers that TCS is planning to do a buyback of its shares. Now the price has come, and the buyback will be done at a premium of 15%. The results announced are also in line with the expectations. The net profit has risen 9% to 11,342 crore from 10,431 crore rupees in the corresponding quarter last year. So the analysts and investors, they are more worried about the visibility, the future visibility of the income. The current income for the IT industry is good. There is no doubt about that. But the IT shares are taking a beating because of the growth prospect, because of the muted guidance coming from the companies. Another news: India is Sweden to start work on green steel pilot project. So Sweden has offered its expertise and has expressed willingness to partner with India on green steel making. So what is green steel making? It is like reducing the carbon emission from the steel making factories. They are planning to switch to technologies like hydrogen-based steel making processes compared to the current existing coal-fired ones. The next news: CBDT has relaxed PAN requirement for foreign entities at GIFT City IFSC. So what is GIFT City? GIFT City is called Gujarat International Finance Tech City. That is, and IFSC stands for International Financial Services Center. So it is a dedicated financial and business hub located in the city of Gandhinagar, Gujarat. So the government is trying to promote it for investments, and many tax concessions and other things have been given for firms operating at GIFT City. Recently, our Nifty, our SGX Nifty, which was trading, it has brought back to GIFT City in India. So now the CBDT has said that PAN will no longer be required for NRIs and foreign companies opening bank accounts in GIFT City IFSC, and not having any. Who will be eligible? Who are not having any other taxable income in India. Now they can just give Form 60 and open an account there. This move will benefit overseas firms wanted to set up treasury management operations, global institutional investors, as well as NRIs who want to set up family investment funds or other structures in India. So very good news for foreign companies and planning to set up FDI funds and NRIs also. In the last news for today, DGFT has put new import registration regime in place for laptops established from November 1. You all know that government has expressed its intention to set up to increase the domestic manufacturing of the laptops and tablets in India. And for that, they have announced a PLI scheme also. Government has made its decision clear that this import registration regime will be in place, and slowly we hope that they will be tightening these restrictions. Right now, they are only saying it will be a simple registration process, and you need to register to just import. But slowly, I hope they will tighten the grip so that the supply is not affected, and as the production in India will pick up, they will stop this imports of laptop and tablets from outside. So it is not going. The system will be placed from November 1st, and there will be no postponement. So this is what the DGFT, that is Director General of Foreign Trade, has made it clear. So hope how things will pan out properly. That's all for today, my friends. I hope this issue, this edition of Finance Updates would prove helpful for you. That's a wrap for today's Market Watch. Thank you for joining us to stay informed on the latest financial news and developments for 12th October 2023. Remember, knowledge is the key in the world of finance, and we are here to empower you with the insights you need. Don't forget to like, subscribe, and hit that notification bell to stay updated. We'll see you right here tomorrow for more crucial updates. Till then, take very good care of yourselves. Stay happy and happy investing. Thank you.